Best financing for small businesses and startups. What is the best financing available for small businesses and startups in Canada? From a borrower's perspective, when the federal government restricts the interest rates that can be charged and the personal security that can be imposed by the advancing financial institution, participating banks and credit unions, by assuming part of those obligations, small businesses and startups are in an optimal borrowing position. The Canada Small Business Financing Program, CSBFP, is a financing program designed and supported by the Canadian federal government in conjunction with financial institutions with whom they share the lending risk to loan money to Canadian small businesses. The Canada Small Business Financing Program is designed for small businesses or startups operating in Canada, specifically excluding farming businesses, with gross annual revenues of $10 million or less. The Canada Small Business Financing Program is administered by the Small Business Financing Directorate pursuant to the Canada Small Business Financing Act and the Canada Small Business Financing Regulations. As of 2024, the maximum loan amount for a borrower is $1.15 million under the Canada Small Business Financing Program. Up to a maximum of $1 million can be provided for term loans for any one borrower, of which no more than $500,000 can be used for purchasing leasehold improvements or improving leased property and purchasing or improving new or used equipment, and of that amount, a maximum of $150,000 can be used for intangible assets and working capital costs. Up to a maximum of $150,000 can be provided for lines of credit, which would be in addition to any term loans that might be provided to a borrower under the program. The Canada Small Business Financing Program term loans can be used to finance the following costs: purchase or improvement of land or buildings used for commercial purposes, purchase or improvement of new or used equipment, purchase of new or existing leasehold improvements, for example, renovations to a leasehold property by a tenant, intangible assets, and working capital costs. As such, the term loan can be used to finance business costs, including commercial vehicles, hotel or restaurant equipment, computer or telecommunications equipment and software, production equipment, costs to buy a franchise. With respect to a Canada Small Business Financing Program line of credit, they can be used to pay for working capital costs, being the day-to-day operating expenses of the business. Although the federal government is instrumental to the Canada Small Business Financing Program, it is the financial institutions, the participating banks and credit unions that deliver the program and are solely responsible for approving the loan. For term loans, the interest rates are determined by the financial institution and may be floating or fixed. For floating interest rates, the maximum chargeable is a lender's prime lending rate plus 3%. For fixed interest rates, the maximum chargeable is a lender's single-family residential mortgage rate for the term of the loan plus 3%. As for lines of credit, the maximum chargeable interest is a lender's prime lending rate plus 5%. The Canada Small Business Financing Program also charges the small business participants a set registration fee, which is set by the program as follows. For term loans, a 2% registration fee based on the total amount loaned under the program. For lines of credit, a 2% registration fee based on the total amount authorized. Registration fees must be paid by the borrower to the lender, and they may be financed. The financing terms of the Canada Small Business Financing Program provide lenders with the option of taking an unsecured personal guarantee from the small business owners. Although participating financial institutions are entitled to require additional personal security, commonly a personal guarantee of 25% of the loan amount. For real property and equipment, security must be taken on the assets financed. For leasehold improvements, intangible assets, working capital costs, and when financing a line of credit, the lender must take security on other business assets. Further specifics are set out in the federal government's web pages on the CSBFP and from the participating financial institutions, being banks and credit unions, including TD Toronto Dominion Bank, RBC Royal Bank of Canada, CIBC Canadian Imperial Bank of Commerce, Scotia Bank, BMO, Bank of Montreal, National Bank of Canada, Canadian Western Bank, ATB Financial, among others. For businesses requiring legal services attendant with their business financing and the related corporate transactions that they are undertaking, contact our law firm today. Thank you.